Grab reported earnings earlier this week, in which we saw a price gap from roughly 335. It did a gap and go and closed the day on Wednesday at about 370. Let's get into the actual results of their earnings before we continue with the analysis. This article is coming from The Motley Fool, why Grab Holdings stock was surging this week. So Asian food delivery specialist Grab Holdings delivered quite the filling and tasty meal for its investors early this week. The company published its second quarter results, which boasted a revenue growth number that was well in the double digits. It also raised profitability guidance and moved forward its expected timing for reaching break-even. That inspired a clutch of analysts to raise their price targets on the shares. Grab's second quarter featured robust 77% year-over-year revenue growth thanks to delivery sales that more than doubled over that stretch of time. The subscriber count saw a nice increase too, advancing at 43% pace. There was also good news on the guidance front. The company substantially upped its projections for adjusted earnings before interest, taxes, depreciation, and amortization. On the back of that encouraging performance, several analysts wasted little time in changing their view on Grab for the better. So you have Barclays, they upped their recommendation to an overweight and raised their price target 50% higher to $4.50. Then you have Bank of America, they lifted their price target to $4.70, which previously was $4.50. And the last analyst who upped their targets was Wall Street's Evercore, and they pushed their level $2 higher to $7. Now, Grab is on track to achieve profitability by the second half of 2024, even as revenue growth slows down. They emphasize the importance of cost efficiency and optimizing the cost structure to improve margins. Grab is also exploring the monetization potential of advertising to benefit their ecosystem and merchants. Despite intense competition in Southeast Asia, Grab is focused on maintaining customer engagement and creating a sticky ecosystem. They are committed to organic growth and expanding their services, including digital banking. With that said, let's get into the charts. And we're going to start with the monthly chart. And Grab went public through a SPAC several years ago. But as you can see, the price has declined from the highs of 18 to around 370 as we speak. However, again on the monthly chart, we can see that price did find support as this month price bounced off of the 317 level, which was where we had this 13 simple monthly moving average bottoming and then starting to move higher, serving as dynamic support. Let's go to the weekly chart. And what I see is just continued sideways price action. So if we just draw a box from March of last year to current price action, it's been range bound between 220 and 380 for the better half of a year and a half. All right, so let's just put a target and we'll put another one there. All right. So as you can see, we really only had one close above this sideways price action, and that was all the way back in March of 2022. So although they gapped higher on earnings, it only gapped to the higher portion of this range bound sideways price action. However, with analysts upping their price targets, we potentially can see a breakout in the coming weeks. The highest target was $7. But before you even consider price getting there, it would need to get through all this baggage at the 550 level. That's going to be an area where there is major resistance in the form of sellers who brought this leg in price down. So potentially what I see right now is all the prices at the upper range of the sideways price action. You had this rally in price. In the last 2 days, you have a basing. So potentially what you could see is you have a rally, a couple of basing candles, and then a rally higher to break out, potentially. So I can't get bullish on grab until we see a close above, say, the $4 level, really. And even back in January, we had price come close, only to the following week open higher to go lower. Now again, the only real breakout we had where we had a close above this upper range was back in March. So aggressive buyers, traders, they can look to get long on a green candle on high volume. Can we see price fill the gap? More than certainly, which is why I'm saying conservative investors just wait for definitive closes above, at a minimum, above this upper range of the sideways price action going back to March of last year. But really, I would like to see closes above $4. So the setup would be the following: potentially, if price does move higher, a pullback, and then a move higher. So impulse move, pullback, impulse move. Thanks for watching. Subscribe, please like the video.